Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in, take a look, see what people are sharing. If you want to follow me at Financial Finance, and if you want to join our community, finding-value.com, I dive deeper into all these topics for potential investment opportunities. I'm a longer term investor. I don't do the short term trading stuff. I can and have done short term trading in the past. I use it for entry points for these big supply demand fundamental sectors that I think are out of balance with huge asymmetry in the companies. These companies are incredibly cheap and we can invest in them at lows and wait for all these fundamentals to play out. So, starting with one of the areas that I'm very bullish on, natural gas. So, natural gas, um, recently it was trading very, very cheap in relationship to oil, very cheap in relationship to any other asset class when looking at it from a ratio perspective. In the beginning of 2024, it was the cheapest asset of any asset in the world markets. And that's where I generally look for potential long term investments. Those long term investments are um, put on when things are cheap. So, this is the natural gas demand in the United States here. This is our inventory level. So, this is our 2024 storage compared to the 5 year average. The 5 year average is this middle guy here in the dark line, the 5 year average. And what we've got here is this is storage, natural gas storage in the United States. You can see that we didn't really draw down very much in 2024. And now we are starting to draw down quite a bit during a little bit colder, um, the colder months here. We've had a little bit more of a cold spell and we're starting to eat through our natural gas storage and get below or close to. We're supposed to be projected to be below the 5 year average, which is down here over these past few weeks. What that is doing is it's sucking out some of the excess inventory this cold weather is. Obviously, we're using it for heating our houses, but it's setting up a bullish situation here going forward. And we're going to talk about the fundamentals here in nat gas, but one of the things that you want to look at and watch are inventory levels. That's exactly what we're doing here. So this is natural gas prices which are highly correlated to storage levels or quote inventory. So net gas price versus gas storage surplus slash deficit to the 5 year average. And what this is we've got a dot plot of Henry Hub price, and this is your natural gas storage versus the 5 year average. I got these slides from Antero Resources if you guys want to know. So the fear factor storage is 300 to 350 billion cubic feet below the 5 year average, which equals $8 to $10 gas prices. So whenever we get below the 5 year average by something greater than 300 billion cubic feet, the price explodes higher to turn on production and slow down the demand. The storage surplus to the 5 year average, low net gas prices are over here. And that's when we start to approach a value that is greater than 200 billion cubic feet above the 5 year average. So a lot of this deals with commercial inventories. The prices move rapidly as you get to some degree away from the average. And that degree is really, I would say, if you want to sum it up, about 300 billion cubic feet. You go 300 billion to the left, prices soar. You go 300 billion to the right, and prices really start to decline. This relationship of this line, this linear equilibrium line, the exponential relationship has an R squared value of 0.75. What that means is that 75% of what is being plotted can be kind of predicted with 75% accuracy within this kind of line there. So the equilibrium when storage is in line with the 5-year average is 375 to $4 gas price right in the middle here. And they're saying it's a 75% confidence that that's going to be in that rough range. So that's the natural gas price and its relationship to storage levels, and why everyone who's a natural gas investor needs to watch storage levels. Now, if you're an investor, just to get your mind right, the best time to invest is when it's high, not when it's low. When it's high and people aren't looking. So this was the bottom of the market for nat gas, was somewhere in this region here, 2024. That's when we were buying some of our natural gas equities. And then when we get a cold winter, and you guys heard me say this many, many times, we just need one cold winter to kind of bring us back towards that 5-year average, which is what we've done. And now I think the projections are we're going to be below the 5-year average, which then puts us most likely above a $4 MMBTU price. This is what's happening in the energy markets. We're getting a lot of coal plant retirements. So large amounts of coal plant retirements provide upside to natural gas power generation through 2030. And these are the coal plant capacity requirements that are being retired. That's what's going on. And my brother's in the electricity generating business, and he said, we're retiring our coal power plants and putting in natural gas. And that's what really drove my interest and a lot of my money towards the natural gas sector in 2020. Here is US demand, which outpaces supply through the year end of 2026. So this is just focusing 100% on US natural gas demand growth. And if we look, your total demand growth from year end 24 to year end 26 is 12. So 12 billion cubic feet per day. If we look over here, this is your US natural gas supply growth. We've got the gas basins production growth, Haynesville and Appalachia, oil basins and other legacy basins, 0.3. The total supply growth between this is 6.1. We have a 6.1 billion cubic feet per day short of demand over the next 2 years. Where is this going to come from? How high is the price going to go? Now, if we're at the 5-year average roughly, and we get this gigantic move to the left, we're going to blow off the size. The $10 won't be enough. Like we could blow off if this transpires and we can't get this natural gas to come online. This is a big deficit here that's sitting right in front of us. Big deficit. And there's a lot of investments that we are already in to take advantage of this. There's also not a lot of people think about the tertiary impacts of this. The tertiary impacts are also going to impact a lot of the energy service companies. As drilling starts to ramp up to meet this 6.1 billion cubic feet per day, there's a lot of other investments that people may not be thinking about. Now, here's more natural gas stuff. So I just want to kind of focus on natural gas in this first part of this clip. This is US power burn. Power burn is you burn it for electricity. So on average, US power burn has increased 1.2 billion cubic feet per day each year since 2015. So this is our growth of US power burn. And it's big. It is big. Keep going. Natural gas dominates the power generation mix. So natural gas power generation demand grew by 4 billion cubic feet per day, or 12% from 2022 to 2024, while all other categories declined by a total of 2.3 billion cubic feet per day. So we saw a decline in other, a slight increase in solar, a decline by water, a slight increase by wind, a slight increase by nuclear. We saw a major decline in coal, which was another big power generating capacity. And then nat gas has been absolutely killing it. And this is the the moves over the years of increasing our power generation mix. It's all going to nat gas. Most everything else, solar is ramping. That's ramping as well. And nat gas has been the big winner. United States exports to Mexico rise, and I know a lot of people don't really think about it, but we export natural gas to Mexico. The rising Mexico power burn demand continues to go up and up and up, forecasting out to 2030. It is an increase going up to that area. Then you combine their production, production is combined with flat production here. So they're not really increasing production in Mexico, but they're increasing their power burn, which means we're going to increase our US Mexico exports. This is our export increase and what it looks like. It is greater than 2 billion cubic feet per day increase forecasted by 2030. So we're really piling on a lot of this export to Mexico even. And this is what's coming for LNG. So this is visible US LNG exports will feed global demand growth. Look at how big this is. So if we look, we didn't have a lot of growth between 2022 and 2024. Quarter four 2024, we got some big increases of LNG takeaway capacity. And then from there, we get a lot of increases throughout time, all the way into 2030. Going from 2022 to 2030, it is an increase of plus 20 billion cubic feet per day by 2030. That is humongous. Keep in mind what, if we go back and we look, that's 20 cubic billion feet. Our total US natural gas demand is 12. And we are increasing our LNG takeaway capacity 2020 to 2030 by 20 billion cubic feet. That's almost 2 times US natural gas demand. Do we even have the natural gas for this to go through? I don't know. I really don't know. I mean, this is a lot. This is a lot of increased production there, or LNG takeaway capacity. I mean, so there's natural gas there. More natural gas. So U.S. natural gas demand hit an all-time high. So this is total U.S. natural gas demand in the lower 48. You can see all-time high here, ripping higher. That's from our cold temperatures, our cold temps going on, and that's going to bring us back below the 5-year average, and that's what's causing the price of natural gas to go up. JC Parrott says the Brazilian real is greater than 1.5% today, is hitting the highest levels since before Thanksgiving. Is it go time for these Latin American currencies? Colombian peso is also hitting a new 3-month high today, and here we are. This looks like a false breakdown. You know who bought this bottom here? This guy did. And there's some good investments that we can, I think, look at when this does reverse higher. And money flows are going to change differently when these currencies move different. So as other currencies, other than the US dollar, I should say, start to outperform, it's going to change money flows in the system. Money flows is what dictates price performance of stocks, and that's what pushes stocks higher, are those money flow capital rotation events. And I do think this is a false breakdown. This is natural gas demand is forecast to soar. So this is one that came from Antero Resources as well. So natural gas demand, LNG exports plus Mexico exports plus AI data centers, crypto and EVs. From 2024 to 2030, we are seeing 105% growth, 29 billion cubic feet per day of all of those added together. And that's growth. Guys, this is a lot of natural gas demand coming on here. I mean, it's a lot. And, I've heard some people, talk about, well, maybe I should sell because I'm up a few 100% on my investment from 2024. It's like, guys, this is coming. Look what's coming right in front of you. We don't have the net gas, I don't think, to supply this amount. So then you have to think, well, where's it going to come from? We've got Canada. Canada could supply some of it. Maybe they can help produce. We'll see. Maybe we need to fire back on the coal power plants. I don't know. But this is a lot. This is a lot. And I'm going to be holding on the entire time through this entire move here. That's why I loaded up in these companies that have all of this production in the areas that we're in. It's all done on purpose. Ben Smith says Nat Gas set some records yesterday. Canada import all-time high. Power burn all-time winter high. Industrial an all-time high. Residential commercial tied for the highest on record. Total demand all-time high. Storage draw all-time high. That's all Nat Gas. It's coming, baby. Confirmed. This is going to be epic. So gold miners valuations. Valuation based on price to net asset value. The gold equities have rarely been this cheap in the past 40 years. We can see we're down here in no man's land on a price to net asset value. The long-term average is 1.5, and we are well below 1. So generally, when you get to these levels, this is when you want to become an investor, invest, and then you want to sit and do nothing. Do nothing. That's where all the money's made. Will it take some time? It could. But big gains could be achieved when investing at levels way down here. Lance Roberts says the S&P's 500 or the S&P 500's valuation measured across multiple metrics like PE, CAPE, and market cap to GDP is at historical extremes, reaching prior peaks. And this is generally what occurs before a capital rotation event. You get to these high locations. This was a commodity bull market in the 1930s when they revalued gold 50% higher. We had another commodity bull market start in 1969. So we came to this extreme level, rotated. We had another commodity bull market in 2000 when it rotated over. And guess where we're at today? Another commodity bull market. Now, why? What is the reason for this? Why do we have these imbalances? Well, it's interest rates has an impact where we oversupply in commodities. The money starts to rotate back over to tech and S&P. And then it just goes back and forth. That's the cycle. So the cycle of buying commodities when they're up here, and that's exactly where we're at. We should be buying commodities, and then we're going to ride it all the way back down. That money is going to rotate into commodities from these high extreme valuations. Now, do we know exactly when it will occur? We don't. We don't know the exact time. But that's the general location of where we want to be buying commodities, all up here. God, this is such a great opportunity for everyone. If you can listen to exactly what I'm saying. Jeff says the stock market's CAPE ratio is clocking in at 37.0. It has only been higher than this twice in history. Good luck out there. The commodity bull market started in 1998-99. There's your peak, and this was money rotating into commodities. Your commodity peak was 2008, which is the bottom here. This was probably 09, in fact. The 09, you want to rotate into this, ride it on up, and then rotate back out. I rotated out in 2020, and I've been riding the commodity bull market from 2020. That's what I've done. We also had a rotation here of this guy to a very low level. This is another commodity bull market from the late 60s all the way to 1980. 82 was the ultimate bottom. Interest rates had an impact on it too of money rotation. This is a shoulder, head, shoulder, bottom. And if you could have purchased this, this would have been the best buying opportunity pretty much out there. This is another really good buying opportunity. It was 1920. So 82 and 1920 for stocks. The best buying opportunities for commodities were these tops all through here. And it will be here too for commodities. Brady says the fact that miners are sometimes lagging the metals is not very useful information. And repeating that endlessly shows one does not understand the miners or big picture charting. Miners have a huge blue backtest in the making. That is why they are not reacting to metals every move here. But what happened after that previous blue big picture backtest was done? Yes, exactly. Playing miners is all about timing as with the metals. The chart below shows the bull market uptrend channel since the bear market low in 2016. The second blue massive consolidation pattern is just now being backtested. Remember that big patterns lead to big moves. So here's the Huey gold miners. You can see the big move in 2016. The back test was here back in 2019. We had another big surge higher all the way into 2020. We consolidated very good entry point in October, September of 2022. And then we had another awesome spot to be purchasing. And then we've got another good spot on the back test. This is kind of the last best opportunity before we do another rocket ship move all the way to the top there. So that was 2016's big move, the big move in 19 and 20, and then the big move that we have coming up here any second. I'll say this again more simply. He says all cryptocurrencies are grift digital Pokemon. That's the whole post. I agree with it. It's just magic coins, guys. Magic coins. JC says big outperformance in spot silver relative to futures today. The physical tightness is very real and accelerating. The great silver squeeze is about to begin. All of the elements are in place. I agree with that. We can also see that the Huey agrees with this back test. That's all set up, ready to rip. I don't see any reason why silver won't absolutely just squeeze it here. I expect a move to, I don't know, I would say something above 50. So you can put whatever in there, 65, 70, 75, 80. I don't know, something like that would be my guess. Charlie Munger says, spend less than you make and always be saving something. Put it into a tax deferred account. Over time, it will begin to amount to something. Yeah, it's that simple. No way for Trump to significantly increase U.S. shale production, says analyst here. I agree with that. There is no way to do it. Unless he comes out and figures out some technology, which I highly doubt the government's going to do. And the price needs to go way up. It needs to go up in natural gas and it needs to go up of oil for us to really drill, baby, drill. It's got to go way up. Here is another chart here from Grady. He says the inflationary 70s will repeat and most probably be dwarfed hugely. Gold is a safe haven and copper a base metal that does well in good economic conditions, Dr. Copper. The chart means rough times are coming and that gold will soar. This is the gold to copper chart. We had the 1970s where we had a big outperformance of gold. And then energy also did incredibly well in the 1970s here. In my opinion, energy was the driver of this move. And what's going to come here is the same situation, I think, of the 1970s. He's got this completely locked down. He is right. So when this breaks, I think energy will be the driver. I think we'll get shortages in nat gas and in oil. And then people are going to be scared about the currency system potentially failing. Interest rates will go way up. Bonds will be sold very hard. And what's going to be left are precious metals. And gold's going to outperform pretty much most everything. We could also see silver and platinum and palladium that they're going to do incredibly well. And it's all playing out on the big picture view. He has a 40-year, absolutely massive, great looking inverse head and shoulder. It's all playing out right now. It's the same. You could also say this is a cup and handle too. Cup and handle inverse. It doesn't matter. It's all up against resistance. We'll break through resistance, and it's going to be crazy. It's going to be absolutely crazy. People have no idea this is coming. And at some point, people speculate that precious metals will become unobtainium. Unobtainium. Eric Nettle says, I was able to highlight the opportunity that tariff uncertainty is creating in Canadian oil stocks to our American friends and barons today, and explain why CNQ and MEG are two attractive opportunities. Trump's Canadian tariff threat scrambles oil stocks, why some see an opportunity. It is an opportunity. Tariffs don't do anything. Tariffs only, tax in general. Whenever you tax something, you just get less of it. That's it. All it does. You don't get more. Our crude storage forecast for this week, no API versus EII crude delta is now around 18 million barrels. API will be more bearish than EII. Look at this deficit, almost 11 million barrels is what he's projecting. 10.84 and this is the average error that they've got going on. It's a huge error going on here, about 18 million barrels. Here is a larger picture view So this is gold, 3,000, 3,300, and silver, $40 to $45 should be next. Gold resumed its secular bull with a mega breakout back in Q4 of 2023. Silver resumed its secular bull with the mega breakout back in Q1 of 2024. Called both breakouts in real time. That also back then, you should not sweat the wiggles from there. We saw these big breakout moves coming at the service there. And here's silver quarterly breakout, and then gold's already broken out. It's running. These can run pretty long, guys. So they're big patterns and they produce big moves. Silver's about to rip here. That's what I think. Silver's about to rip. That's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. And that's all I've got for today. So we'll catch you next time. This is Finding Value.